The utility of Bitcoin continually increases each and every year. The house I'm in right now, I did buy with Bitcoin.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
What's up, everybody? Jay Martin here, CEO of Cambridge House, and today I wanted to share this conversation that I had with Simon Dixon, who is the CEO of banktothefuture.com, an online platform for crypto investors. Now, Simon is maybe the most successful crypto investor that I've had on the show. Definitely, actually. He started investing in Bitcoin as early as $3, but invests in all sorts of services and products in this space. And that's what he advises and helps other people do as well. So I wanted to talk to him about this because I invest in cryptocurrency, really just Bitcoin, and my strategy is very unsophisticated. Essentially, I allocate a little bit of capital every 2 weeks to my Bitcoin holding, and I don't really think about it. I don't watch the price. I don't do anything more. I just like to have a horse in that race. And so I wanted to share this with Simon, get his thoughts on how newbies could enter this space with a bit more sophistication and strategy, make sure they're reducing risk, increasing upside, all the right things we want to do. We talked about the common comparison that people make between gold and Bitcoin. And I've often thought about Bitcoin in my portfolio the same as I think about gold, right? I push cash that way. I don't think about it. It's almost an insurance policy. And he talked about why that's a mistake and why you shouldn't think about that, why he has both gold and Bitcoin in his portfolio and how they serve him very, very differently. So it's interesting to hear his perspective on that. We also got his forecast on currencies in general. We talked big picture economics, but he was great to have on the show, and I look forward to having him back. So I hope you enjoy this. I sure found him fascinating to talk to. He's a very, very smart individual. And if you dig this conversation, right beneath this video, there is a pinned comment where you can subscribe to my weekly newsletter where I recap conversations like this and many more. So I hope you dig it. If you do, leave me a comment. Let me know who you want to hear from next, and I'll hunt them down. Okay, enjoy.
Yeah, so the basic principle is that over time, from my decade of being involved in Bitcoin, it started with me in a room with 20, 30, 40 other people in us versus the banks experiment that we were doomed to fail. It was a bunch of people, we wanted to support the industry, but I don't think anyone really believed that this thing would succeed. But each and every year, the utility of Bitcoin just went up. A new use case came along. The world discovered that there's a reason why you want to own your own money, why you want to spend your own money, or why you'd want hard money that can't be printed. Until a decade later, 9 million% returns later, we've seen that the utility of Bitcoin continually increases each and every year. Now, a lot of it is speculative, but each year a new use case comes along where people discover why they would want Bitcoin. And the supply is fixed at 21 million. And so therefore, it's the hardest form of digital money that we've ever seen, and mimics many of the properties of gold, but doesn't have some of the properties of gold. So you get a lot of infighting between people that like gold and people that like Bitcoin.
Yeah, you certainly do. And we do within our audience and at my conferences and on this channel. Because the motivation to flee to Bitcoin is the same motivation that you would flee to gold. I mean, you said it, right? Exit from politics and currencies, right? You want to exit yourself from your country's currency and any political crises, and you might go to an alternative asset class like Bitcoin. That's the same reason I buy gold, and the same reason I buy Bitcoin, coincidentally.
So gold and Bitcoin, I use them very differently, actually. So the way that I think about gold is a store of value. It's got 5,000 years of history at preserving wealth. So if you bought a good 5,000 years ago, you can probably buy the same amount of goods with gold today, 5,000 years later. And for that reason, it's one of the favorite asset classes of the rich and wealthy. But one of the big downsides is that it's very hard to store. So you tend to have to give it to a custodian in Singapore or Switzerland to look after it for you. And it doesn't tend to produce returns because a store of value is not meant to produce returns. It's meant to preserve your wealth. Whereas Bitcoin is what I call a speculative store of value. That means that the vast majority of the world don't understand Bitcoin because it's only 10 years old. Interestingly, everybody's heard of Bitcoin no matter where I go in the world today, which just wasn't the case 10 years ago. It was just nobody had heard of it. But now everyone has heard of it. And so it's a speculative store of value. The reason I call it that is because it's actually a wealth creator if Bitcoin turns out to be a store of value. But whether it will be or not is unknown at this stage. But I believe it will be. And so therefore I speculate on the price increase because I believe that it can be a great store of value in the future. And so that's kind of Bitcoin is a bit of a wealth creator if it in a very high risk environment, whereas gold is a wealth preserver in a low risk environment. And so, but they also do two different things. So if you think about it, if the internet goes down and everything goes down, it's going to take a while for Bitcoin to adjust, and therefore I'd love my gold at that stage. But when we're in a lockdown and we're in a global currency war and governments are all fighting and you can't get on a plane, I really don't want my gold. I don't think I'll be able to access my gold in Switzerland, or I don't trust the custodian at that stage. So therefore, if I'm in lockdown in my house, I need something that I can store vast quantities of and access very easily. And Bitcoin is amazing at that. You can travel across borders with vast sums of value without necessarily, you know, obviously if you have to declare it, you declare it. But it's not like a ginormous pool of cash or gold that is very tricky to actually store. So Bitcoin and gold are actually a match made in heaven, but you know, people like to stick to their philosophies, and Bitcoiners tend to think that gold is an ancient relic, and gold people think that Bitcoin is this crazy Ponzi scheme or something. But the returns in Bitcoin are actually because the vast majority of the world think it's still a Ponzi scheme, a scam, a currency just for drug dealers, or a get-rich-quick scheme. From my perspective, it's not actually, that's not the true value of Bitcoin. And the reason that there's so much more asymmetric returns from my perspective is simply because one by one, people will discover that it's not. And that is the asymmetric, unique opportunity that only a 10-year-old asset class can produce. So much misunderstanding over what Bitcoin is and what it's good for.
Yeah, and it seems to me, Simon, because I have conversations like this all the time, and it's my ambition to speak to as many intelligent money managers, entrepreneurs, economists as I can, to gather as many perspectives to help myself and my audience create our investment thesis. And there seems to be a groundswell right now. More and more frequently, I speak to people like Raoul Pal, founder of Real Vision TV, Lynn Alden. You know, we hear about people like Paul Tudor Jones allocating large allocations to Bitcoin right now. And it's different though. I mean, I was very involved in this sector, shouldn't say very involved, but I ran a series of technology investment conferences through 2015, 16, 17, 18, and 19. And I guess it was January 2018, right? We had people ripping down the curtains, trying to get in the speaker halls and workshops if anybody was talking about Bitcoin or even blockchain technology. And you know, anybody could look at that environment and see it was a mania, right? It was panic, right? Panic trying to get in, and you reflected in the price. It's not that way. We're seeing this I'm seeing this groundswell and a surge of interest, but it's kind of under the radar, right? And it's not the retail investors piling in. It's some of the smartest money that I talk to piling in. And so are you seeing this come back to favor in the mainstream?
Yeah, one thing I've seen time and time again over the last 10 years is that the Bitcoin will always have bubbles and crashes. So me personally, I've seen my $30 Bitcoin crash to $3. I've seen my $1,250 Bitcoin crash to $250. I've seen my $20,000 Bitcoin crash to $3,000. and I fully expect my $100,000 Bitcoin to crash to $30,000. Bitcoin is full of so much confusion. It's so many. It's such a strange concept to so many people that you are going to get just ginormous bubbles of people wanting to, get in. So much wealth has been generated, and so much has been destroyed from traders, trying to get in the right side of these bubbles and these pumps and dumps. But typically over that decade, you always see a new high. I'm not saying that, past gains equals the future. But, I just, when people ask me what, when are you going to sell your Bitcoin? I say, well, what am I going to buy? I might buy some gold. That would be as a store of value, not as a wealth creator. I might invest some into US dollar denominated assets like treasuries and stuff like that, assuming that the traditional financial system will fix itself. But there's not a lot of places that you actually, want to do that. So for me, when people ask me, when do I want to sell Bitcoin? I just think, well, what am I going to buy?
Sure. Yeah, that's the right question, I guess. Have you ever sold any Bitcoin, Simon, since you started buying?
Absolutely. I mean, we're all, there's a very funny, every year we celebrate Bitcoin Pizza Guy in the Bitcoin industry. And that's because one of the first transactions was when someone persuaded Papa John's Pizza to accept 10,000 Bitcoin for 2 pizzas, which is now at this stage about a $920 million pizza.
Yeah.
Or 92 million, sorry, got my zeros wrong. And we've all been Bitcoin pizza guys. So I've spent a lot of my Bitcoin. I've invested a lot of my Bitcoin. I use my Bitcoin. But what I've learned in the end is to separate money from investments. And so what I've seen, I've actually know a lot of people that were involved in Bitcoin from the very beginning, in the highest performing asset class for 10 of the last 12 years. And they still ended up with no Bitcoin because they had to sell it early, because they were using it as money, and not separating their investment theses from their money. And so the reason Bitcoin is so confusing is there's a lot of infighting about whether it should be money or whether it should be an investment.
Yes.
But the reality is that it's just whatever you want to use it as. And I know so many people that spent their Bitcoin very early and ended up with no Bitcoin. So you got to have some good money management and really put things into buckets of which parts you're using, as just like you would with traditional money. You'd have your checking account and your savings account, and your savings account you're trying to invest for yield or returns. But your checking account is your money.
Great. Now, did you buy your house with Bitcoin, Simon?
The house I'm in right now, I did buy with Bitcoin. I tried to, the person that's the developer that sold us the house was about to cave in and accept Bitcoin, but this was when it crashed from $20,000 to $3,000. It actually, I hedged it using what's known as a stable coin so that I could know exactly how much Bitcoin I was going to be buying. But the challenge with that is because the seller wanted to, it was a pretty large ticket. And when you're dealing with that amount, I was obviously disclosing to the bank that the funds came from Bitcoin. And so because of that, because of the confusion, it wasn't a crypto friendly bank. I have crypto friendly banks, but traditional banks are, very confused with this. So I had to do approximately 9 months of source of funds, source of wealth, and showing that I didn't, earn those Bitcoin through illegitimate activities. But eventually we got the bank to actually accept those funds, and bought the house with Bitcoin, but had to get it into the currency that the seller wanted in the end.
Right. Okay. So you were able to execute eventually. Just what a headache. Okay.
Absolutely. Yeah, it was just a headache because I was with a non-crypto friendly bank.
Right. Okay.
The good thing was that I could actually prove on the blockchain that I didn't earn those monies from the proceeds of crime. It was just getting the bank to understand that required them bringing in an external party that could verify that these weren't the proceeds of crime.
Now, what year was that?
That was about 2 years ago.
Oh, so
So
not fairly recent. Okay. Do you think it would have been any different today? Have things changed at all? Or would it still be a laborious process to prove the money is legitimate?
the funny thing is if I was doing the same transaction again, I know the exact legal team to use, the exact tax advisors to use, the
Sure.
exact developers that know how to do it, and the exact bank that knows how to verify that transaction. So the second time round would have been really fast. But yeah, the reality is that this is a confusing asset class. You know, for most banks, just want to run a mile from these types of transactions. So there is a bit of a process for making sure you're dealing with the right parties that understand this asset class.
Right.
But if you are doing everything legitimately, that's not it used to be a hurdle that was insurmountable, but now there's more and more vendors that can actually, that can take on a transaction like that. That's only increasing and increasing the further along we go.
Right. Now, because you mentioned that just the various use cases of utility of Bitcoin increasing every year, what has stood out as really moving the needle in terms of improving the utility of Bitcoin in the last 1 or 2 years, Simon?
From my perspective, it's still the same thing that it was way back in the beginning. So, you know, we've had a tremendous amount of innovation in what I call the crypto general markets. And alternatives to Bitcoin have captured a lot of those different use cases, like Ethereum has become a bit of a protocol for taking all of the traditional financial products and doing them in a more decentralized way. So you don't need a third party in the middle. But these are still niche products at this stage. For me, Bitcoin, the utility that it originally set out is still what it is today. Now, the only major difference is that it's virtually impossible to ever be taken down. So, you know, it's audited by thousands of computers, geographically diversified around the world. And it would cost any government agency billions to try and perform a sophisticated attack to take it down, which is still very logistically virtually impossible to do. So Bitcoin isn't going anywhere anytime soon. But you know, the people in Cyprus didn't know they needed Bitcoin until they had a bank bail-in, still one of the use cases. Wikipedia didn't know it needed Bitcoin until it got taken down by the banking system for doing things completely legal and legitimate, but they wanted to close it down because it wanted to be censored. The Greek people didn't know that they needed Bitcoin until their ATMs were closed during the European debt crisis. The Indian people didn't know they needed Bitcoin until they had to queue outside a bank in demonetization and put their life savings and risk their lives to try and digitize the money through the banking system, just because the government wanted to follow the Western banking model. The people in Mexico didn't know they needed Bitcoin until Trump became president and their currency was devalued 25%. People in England didn't know they needed Bitcoin until Brexit became a political topic. And the people today don't know they need Bitcoin until the government prints $6 trillion of new dollars, diluting, and people start asking questions about what comes next: inflation, deflation, or do we have the complete destruction of our currency? So the use case again is any situation that makes you realize owning your own money is a good idea, being able to spend your own money is a good idea, and protecting from dilution of your traditional currency is a good idea. And that use case has not changed much at all.
Now you mentioned that just the difficulty of staging an attack on Bitcoin because of the complexity of the underlying technology. But could the technology catch up to a point where it's no longer such a difficult thing to execute when quantum computing becomes widely adopted? Do you see a time, Simon, where the security of Bitcoin does become compromised because technology catches up?
I think if quantum computing does catch up, we've got much bigger problems in the world, because that will attack a lot of systems simultaneously. And so that's not a unique problem to Bitcoin. That's a problem with cryptography, which is essentially the entire banking system, and our national security. And you know, when that world comes, there are big problems. And this is where the gold argument does come in. So if we enter that, that world, that's where you want to hedge your Bitcoin with some gold. The likelihood of the world getting there is really a technology conversation. I'm a finance guy that tried to understand as much about technology as I could and surrounded myself with the best geeks that were building this technology and invested in them. But the quantum computing argument is, I think, a bigger argument around the future of the internet, the future of Bitcoin, the future of national security, the future of banks, and everything in between. So I do think we will have big problems there. But the way that Bitcoin works is that if something is mission critical, it's very easy to reach consensus around changing the code, but it's very hard to reach consensus around changing the code if it's not mission critical. So what makes Bitcoin like a commodity is, over the years, developers have wanted to change it, miners have wanted to change it, businesses have wanted to change it, but they never succeed because pushing Bitcoin changes in the direction of a small group of people never gets consensus. But the times when Bitcoin has been able to change its code is when it is a mission critical, and it can get over 75, 90% majority consensus from all the participants, the miners. And so if that world exists, then an alternative anti-quantum computing algorithm will exist. And I'm pretty sure that if it was mission critical, it would get the change needed. And the smartest developers all around the world, Bitcoin's like the largest bug bounty program in the world. If you can hack Bitcoin, people have tried for the decades and decades. Well, a decade, sorry. The reward for cracking it is really, really big. And no one's been able to do that, not because Bitcoin is so unique, but because it's actually distributed across thousands of computers that are all auditing it. And the reward mechanism encourages people to continue auditing. And that makes it something very, very unique, as opposed to JP Morgan's database backed up in several places.
Okay. Jamie Dimon is another one who I believe has recently changed his tune dramatically on Bitcoin. So Simon, what are the things that could prove you wrong in terms of your bullish forecast on the Bitcoin price? Is it government intervention? Is it some kind of a breach of technology? But does anything come to mind that you think could change your current belief in Bitcoin?
Yeah, I mean, I'm open to being wrong, but everyone that's bet against Bitcoin over the years has done very badly. It continues, but there are certain risk factors that exist, which is that you talked about the quantum computing one. That's one unknown that many smarter developers think that is not a big problem, but it's still one of those things. The other one is a blanket coordinated ban from governments all around the world on Bitcoin. I actually, on my YouTube channel, I had a debate with Jim Rogers, the investor, around this one. He's very bearish on Bitcoin, and he believes that the biggest risk is that it will succeed, then governments will ban it. I think those are really the two major things. Disruption by another cryptocurrency, I don't see that as a major thing, because it's those are the three major things that people will discuss. We can go into, we've done the quantum computing one. In terms of government ban, a more likely scenario that I see is we've already seen one individual large government try and ban Bitcoin. And we've seen it in countries like Venezuela, which are experiencing hyperinflation. The largest country that has attempted to try and outlaw not Bitcoin, but Bitcoin exchanges was China. And that actually, when China banned it, it went from 3,000 to 20,000. So we've seen historically that when governments try and take Bitcoin into the black market, it tends to give a premium to the price. But what's interesting is I think that governments, so I believe that we're going to have a complete monetary renegotiation ahead. I think that all governments have destroyed their currencies in order to get out of this health crisis. And I think one of the things that like the smaller countries that ever I'm advising is I recommend small countries to dedicate some of their electricity to mining Bitcoin. So if I were, you know, somewhere like a country that's experiencing horrors with their currencies at the moment, Lithuania or something like that, then no one wants their currency. That's the issue. But you can dedicate some of your electricity towards mining Bitcoin. And then you could actually get your central bank to announce that you've accumulated it and you're adding it to dollars, gold, and Bitcoin. The effect that that would have on price would obviously be very bullish. And you've seen countries like Bulgaria, for example, they confiscated 200,000 Bitcoins from a criminal organization. And those Bitcoins just disappeared in government. But the value of those Bitcoins is greater than Bulgaria's entire national debt. So the asymmetric bet that individuals get to make, I also think is a bet that countries can make. And they can manipulate it even further by stating that they're going to use it as part of their reserve currency, reserve pool of assets. And then you can get countrywide FOMO. You know, the countries that are last to do it, the ones that are going to lose the most from this, in one of the most interesting game theoretical scenarios that I think we could see, where the larger countries like America, China, Europe, Russia, I think they'll be accumulating their gold reserves to try and get a seat at the table in a Bretton Woods style renegotiation that's coming. And I think the smaller countries, their game is Bitcoin, because Bitcoin's always been about asymmetric returns for those that see things before the rest. And I think countries can do the same.
And are any countries moving this way already, Simon?
So I live in the Isle of Man, and Isle of Man was the first government that ever wanted to support Bitcoin. The problem is that they rely upon the Bank of England and the GBP clearing system. So I spoke at a conference in Isle of Man in 2014, and that was the first government-sponsored Bitcoin conference. They wanted to accept tax in Bitcoin. I would if I were a government. Why not? Much rather hold that than the currency. They got a call from the Bank of England to their regulator saying, if you support this, we'll lose clearing. You'll lose clearing to the island. The interesting thing is that since then, 2014, about 2015, a new innovation came along from a company we invested in. It was a company called Bitfinex, and they created a stable coin, or they acquired a company that was creating a stable coin called Tether. And the Tether is a digital dollar, and it essentially is about $9 billion worth of these digital dollars behind it. But Isle of Man could do the same thing. So Isle of Man already has the laws and legislations to create their own paper money. They have their own version of the pound, the Manx pound. They could create their own version of digital currency through a stable coin, remove their dependency upon the Bank of England. They'd obviously have some challenges in the SWIFT banking system. But I think these types of even countries trying to take out the dollar right now are figuring out back doors to be able to work without SWIFT. Countries' desire to work and operate outside of the dollar is making them create a lot of innovation. So really, there are countries doing it. There are no one's going to be announcing that yet. I think when things get really bad, that's a really viable recovery plan for a country. And I think someone's going to take that. And I think more people are going to take it. And really, in a nutshell, it's competition that stops that, happening. What we saw in 2017 is if a country gets very bearish on this industry, another country would put the regulatory structure and take all the jobs. Competition is the thing that's driving this industry. And I think that Bitcoin in the end makes fiat currencies more honest. I think it regulates the regulator. You're seeing all this innovation with fiat currencies. you're seeing Facebook come along and create their version, is simply because Bitcoin is creating this competitive force, and companies, countries, central banks are all trying to tap into a competitive advantage. And Bitcoin can play in that, and it can also innovate fiat currencies and make them better.
Okay, now let's walk through, Simon. I don't know what you recommend, but if you recommend, call it a Bitcoin investment strategy, right? For someone who's hedged their wealth in gold, they maybe invest in the equities of the bond market, they hold some cash, they become increasingly curious about the Bitcoin market specifically because they've seen more and more intelligent people moving that direction. What's the smart first step?
Well, we were talking before this interview, and you were saying that you buy Bitcoin every couple of weeks.
Yeah,
and I think
that's the price, to be honest. Like I you know, my intelligence on Bitcoin, I would say, is mild at best, because I talk to so many people that I respect and see them moving this direction. I want to make sure I have a seat at the table. So yeah, the most intelligent trade I would make is I'd say I buy on red days, but every couple of weeks I just increase my holding a little bit and I don't really think about it.
Yeah, so I've seen a lot of people that were, as I said, there at Bitcoin from the beginning and ended up with no Bitcoin. And that's mainly because they speculated, over speculated. They didn't implement some sound risk management or just traditional money management principles. So actually the principles that work for traditional finance work pretty well in Bitcoin, but there's a few nuances. And that is that, you know, Bitcoin is very unique from other cryptocurrencies. It's the world's best shot we have at achieving sound money from my perspective in a digital format. But many, you know, thousands of other cryptocurrencies try and create the same thing. The flaw in them all is that they're always associated with an individual or a person. And therefore people rely upon that person to innovate the cryptocurrency. Whereas Bitcoin was created at a time when just nobody cared. It's immaculate conception. And it reached a level of security that nothing else has been able to catch up to. And therefore, it's very hard to change. And although many people see hard to change as a bug, and so they innovate things that can change, it's actually what gives Bitcoin its commodity-like feature and makes it unique. But then there are ways of enhancing. So one of the things I've been doing at the moment is describing how I would build a portfolio and what I believe is the Great Depression of 2020. We won't know that until 3 years from now, but I believe that it started today. And you need to prepare for three eventualities. One is that I talked about a monetary renegotiation. I think central bank digital currencies are going to be used to bail out the banking system. And therefore, a bet on business as usual. Governments and central banks being able to continue a US dollar dominant world, and therefore a traditional portfolio is a part of my conservative investments. Gold plays a big part in that because I do believe that gold, most people think that gold is an ancient relic in the monetary system. I believe it's got an increasingly important role, especially as we see to start shifts in terms of currency powers and currency wars. But in the Bitcoin part of it, I tend to, one is accumulating Bitcoin, and you need to diversify from yourself. So you need to learn how to store Bitcoin. And so some of it I'll store myself, and that's a process. But also diversify against yourself. And have some of it in custody because custodians might be better at storing them for you. But again, you know, it's a diversification against risk. Then I'll look at some Bitcoin enhancing strategies, but you've got to have a bit of a risk managed approach to this. It's not like traditional portfolio where you might have some in stocks, some in bonds. You know, the alternatives are infinitely more risky. So the type of way that I would be doing it is I would have some of my Bitcoin on loan, and therefore you receive yield on your Bitcoin by lending it to traders, and this all collateralized loans. But however, you need to take some counterparty risk. I'll also hold some of it in stable coins and lend those out to receive yield as well. In cryptocurrency, on your dollars that are held in crypto format, you can actually receive like between, an average of about 8% yield on that, which is unheard of in traditional finance today. This is where we used to be 30, 40 years ago. Also, I talked about...
Just a quick question. When you lend out your Bitcoin to generate some yield, how are the Bitcoins that you've lent out valued when the price can be so volatile? Is it frozen at the time of the loan, or how is that calculated?
Yeah, so it works on a collateralized basis based upon, so dollar loans are issued based upon the value of your Bitcoin at the time. And sometimes these loans are backed by 300-400%. So this isn't borrowers that don't have any money, consumer loans. This is hedge funds that have a lot of collateral but want to leverage their collateral in the derivatives markets, in the Bitcoin derivatives markets. So you can lend them out, but they're many times collateralized. If the Bitcoin crashes like it has, then the hedge fund will get a margin call, and those Bitcoins will be sold automatically, or they have to increase their collateral. So they're actually pretty well backed, but obviously the volatility is the risk there. That you have a massive, it wasn't collateralized enough. You have a decrease in price. They can't sell those at time, and then you have issues. So that's why it's lending your Bitcoin is infinitely higher risk than holding your Bitcoin, but that's why you're getting yield. And so a percentage of it would be for yield. And then I'd have a small percentage for what I call betting on alternative use cases. And so I talked about this alternative Ethereum. Ethereum's built a protocol for decentralized finance. And there are thousands of things. My full-time job is to stay up at this as a full-time investor in the industry. And I still can't keep up. I need a full-time of researchers just to keep up with this stuff. So one of the easy ways is just holding some Ethereum, lending it. And you can do that through these decentralized finance things. But that's more of an advanced strategy to optimize your Bitcoin position by taking greater risks with it. A lot of people, they just end up with no Bitcoin and gamble it all on these alternatives. And those people tend to get wrecked, or it's a gambler mindset at that stage. It's not investing.
Simon, for anybody who wants to hear more from you, you've got a very active YouTube channel. I think you put out content weekly, if not more frequently. Where can people find you, Simon?
Yeah, so I'm involved in a couple of things. Simon Dixon, if you search out Dixon, is my YouTube channel. And that's actually been documenting my journey from before Bitcoin. So when I was giving lectures on monetary reform, one of the videos that re-emerged recently was a video I uploaded. It was from a 2009 talk, but I uploaded it in 2011. And it was called The Great Depression of the 2020s. And suddenly this popped out, and I forgot that we actually uploaded it, but it tracked, Keynesian and Friedman economics, leading to a forecast of a 2020 situation where we are. I didn't know it would be a pandemic, but I was tracking the debt cycles. But it's also got a recording from the first Bitcoin conference, and more actively, I've decided to, with this global pandemic, I've been giving people more ideas on what I've been doing with my money during the Great Depression of 2020s. So YouTube is one place. For high net worth and qualifying investors, banktothefuture.com is the company I co-founded. And that's where you can invest in the companies that built the crypto industry. We've got 90,000 high net worth investors that all invested in over 100 of the highest performing companies in Bitcoin and the crypto industry. And these are the two main places. I'm also on Twitter at Simon Dixon Twit.
Well, thanks so much for chatting today, Simon. It was great to connect with you. And it's a gorgeous view behind you.
Thank you. Yeah, it's normally a bit more sunny, but we got a strange day today.
Got it.